Have you ever wondered why stock markets fluctuate so drastically? Well, it's all about investor sentiment, economic indicators, and central bank decisions. Recently, United States stocks took a plunge and Treasury yields jumped, all because of some unsettling inflation data. Let's dive deeper into this financial whirlpool. The Federal Reserve, America's central bank, recently announced another interest rate hike, lifting the key rate to a range between 2.25 and 2.5%, the highest it's been since December of 2018. This decision is a direct response to rising inflation, a phenomenon where the cost of goods and services increases over time. Investors initially reacted positively to comments made by Fed Chair Jerome Powell during the press conference, interpreting them as a sign that the central bank could start to ease its aggressive stance. However, not everyone agreed with this interpretation, with some arguing that Powell's remarks were actually hawkish, implying a more aggressive approach to combating inflation. Interestingly, the United States gross domestic product for the second quarter showed a 0.9% year-over-year drop. This meets one technical definition of a recession. Yet Powell stated that the U.S. economy is not currently in a contraction. This statement sparked a debate among economists and market watchers. In the corporate world, Meta, the parent company of Facebook, reported a 1% drop in revenue and a 36% decline in profit. The company attributes this to a slowdown in advertising spending and increased competition from platforms like TikTok. In the aviation sector, JetBlue announced a $3.8 billion deal to acquire Spirit Airlines. This came after the cancellation of Spirit's proposed merger with Frontier. This consolidation could potentially reshape the landscape of the American airline industry. Companies like Altria, Harley-Davidson, MasterCard, and Pfizer reported their quarterly results, further adding to the market volatility. Across the Atlantic, the initial reading of Europe's GDP for the second quarter is expected to show a slowdown, but no contraction in activity. The ripple effects of the Fed's decision were felt globally. Asian and European markets had mixed reactions. While the Stoxx Europe 600 index fell, Hong Kong's Hang Seng index closed significantly higher, led by gains in internet giant Tencent. The financial world is an intricate web of interconnected events and decisions. A rate hike here, a profit drop there, can send ripples across global markets. Navigating this complex landscape requires an understanding of the forces at play, from central bank policies to corporate earnings reports. Remember, the economy is a living, breathing entity, constantly in flux. The key to understanding it lies in staying informed, analyzing the data, and keeping an eye on the horizon. That way, one can better anticipate the tides of change and navigate the choppy waters of the financial seas. Thank you for joining me today as we unraveled the recent events in the financial world. Until next time, stay informed, stay savvy, and keep an eye on the markets.